Okay, I need a laser pointer.
Right here. And
Thank
I'm changing your slides right now.
Okay, great. And this works. Is this the laser?
The laser is the middle one. The middle.
The middle.
middle,
And this
that
one
one.
goes backwards forwards. Okay. Great. How's everybody doing today? Good. Good. How many of you have heard me speak before? Really? Nice. Welcome back. And so that means most of you haven't. Good. I'm going to save a lot of souls tonight. Got to preach the word, baby. Preach the word. I didn't listen to Christina's introduction, but let me personally introduce myself. My name is Robert Campbell. I wrote the book Timing the Real Estate Market. I wrote that in 2002. I'm on the 4th edition right now. I have sold almost 30,000 books from my website. Wow. And for people who have self-published, anybody have any experience with that? You know what they told me? My mom says, or somebody says, Bob, son, I have a friend that published a book and he said, don't have more than 100 copies printed because that's all you're going to sell. Dad and I are only going to buy so many. So, me, I kind of had the idea that I'd sell a lot more than 100 to 200 books. So the first printing run, 3,000. You go, those things are going to be sitting in your garage forever, son. 4 months later, all gone. So 15 years later, I've sold 30,000 copies. I'm in the process of starting a new book right now that builds on this book. And what this book does, this tells you how to time real estate markets. Anybody in here read books? Good. Look, anybody here read this book? You've actually read it. Yeah. You know what percent of all people buy this book and never read it? 90%. Never open it up. I mean, that's just the nature. That's any book. You buy it because you go, this is good. I don't have time. And you know how long it takes to read this book? Get through it? How long does it take? 4 hours? 4 hours. Right. So after I wrote the book, well, I wrote it. So, is it completely understandable? Is there one word you didn't understand? The Wall Street Journal writes to you know what grade level they write to? 11th grade. And that's a pretty
high. No mistake.
Well, today it's probably pretty high. I published this book, and then I started writing the Campbell Real Estate Timing Letter based on the timing model in this book. This book here, I have subscribers all over the world. After 15 years, my average subscriber has been with me 5 to 7 years, which tells me a story. If I was publishing a bunch of crap, you know how long they'd be with me? Not 5 to 7 years. I tracked 19 markets all over the United States, 5 in California. Sacramento, San Francisco, Santa Clara, Los Angeles, and San Diego. And the rest are all over the country. A little bit of background, a little more about myself. I graduated from UCLA in 1969. Anybody ever heard the name Lou Alcindor? Yes. He and I were in the same class. What? Oh, this is non? Lou Alcindor, him and I were in the same class. Pretty amazing. You know what it is? We're good? We're good now, thank you very much. And I have a degree in economics, and I have to tell you, I have to confess, I spent a lot more time on the volleyball court than I did in the lecture hall. But I graduated, had the time of my life, little San Diego boy coming up to Hollywood. Believe me, I had a good time. I was right in the middle of that. I thought this is too good to be true. So, but I've had an interest in economics because you're not going to learn economics, or for that matter, much in college if you haven't figured that out yet. All the education comes afterwards. And after about 20 to 30 years, I finally figured out economics where I was comfortable enough to get in front of an audience and explain it. Up until then, I thought I had it figured out. Then there was always these little glitches, like for 20 years. This doesn't work, this doesn't work, this doesn't work. But finally, I figured it out. So tonight, I have 96 slides to show you. I normally show 100. That's a lot. Oh, you can't. This is the fastest hour you will ever spend in your life. I've been doing this for 15 years, so I kind of have an idea how crowds react. I'm gonna do 3 things tonight. 3. I'm going to educate you. I'm going to scare the hell out of you. And I'm going to motivate you. Because you have a lot more control than you think you do in this world. You just don't have to get pummeled to death during the market cycles. I just turned 70 years old 10 days ago, May 3rd. My number one investment isn't, I'm an active investor. My number one investment, however, is my health. Because if you're going to have a few bucks, if you don't have your health, you know what you have? Zero. I work out at a gym. I belong to the same gym for 25 years in a fairly affluent area. There's a lot of Chicago Bulls that played with Michael and stuff like that. So I like that because they set the bar really high. But I'll tell you, there's also retired medical doctors in there. And they said, Bob, do you know what, and I live in the Del Mar area, so that's a fairly affluent area, right? It's not the hood. They said, do you know what percent of my patients would give up all their money right now to have your health? And they go, every single one of them. And that kind of stuff registers with me. It's the most important thing. I'm not going to talk about it anymore. I work out 2 hours a day, and that's because if you want to be successful in life, the first thing you need is energy, right? How many low energy people do you know are really successful? Very few. And here's the formula. I'll give you a formula right now. You want a lot of energy? Want me to tell you how to get a lot of energy? Work out. I'm not kidding you whatsoever. It's real simple. Work out. Okay, so we're going to get started here. Where's my thing here? We're going to get started. So let's go. Oh, which side? I got this side. It pays to be paranoid. Success breeds complacency, complacency breeds failure, only the paranoid survive. Now that's a pretty negative friggin' thing to say, isn't it? That guy's got to be a really a doom and gloomer. You know who said it? Andy Grove. Anybody that name ring a bell with anybody? He's a co-founder of Intel. Now, you think that guy's kind of successful? Yeah. Intel's is a Dow 30 stock. That guy's worth lots of billions. You know why he says that? Because he made the statement, and this is the scare part for you guys. He said, we are a real successful company. Somebody could come along in technology and produce a better chip that's twice as fast and costs half as much, and we're out of business. So you always have to be improving your game. It pays to be paranoid. The most successful people I know, and I've been doing this since I was a teenager. I asked my dad, I started playing the stock market. It's been an interest, it's a gene in me. I started playing the stock market when I was in high school with real money, my money. Because I had a few bucks. I used to work on my dad's construction site. By the way, I'm the son of a home builder. And I like to tell people I was born on a construction site with a hammer in my hand. And that's not too far from the truth. I was a builder developer for 10 years, and I love the business, I love the excitement, but I don't do it anymore for the simple reason it cuts into my gym time. I get up at 5 o'clock in the morning and work, get on the internet, answer emails, read, research until about 9:30. Then I go to the gym for an hour and a half. I come back, I work for another hour and a half, 2 hours, 3 hours. Then go to the beach in Del Mar and take a run on the beach. Then I come home and work the rest of the day. I do that grind 7 friggin' days out of the week, and it's a magnificent lifestyle, I'll tell you. But I mean, that I decided that whatever you guys do in life, the first line of defense, whatever you do, let me tell you this, is having a skill, a good business. Because the markets can go to hell, the economy goes to hell, but if you have a valuable skill, you still have a source of income. You're not going to be homeless on the street eating out of garbage cans. Now then take care of your investments. I mean, investments are important too, but having a good business is the best investment in the world. How many people you already know that? You look at the people, the billionaires, did they make it by day trading or speculating in real estate generally, or was it through a business? Businesses. They developed Home Depot or something like that. It was an ongoing business. Or if it's not that, just develop a skill where you always kind of get better. Always get better. I mean, I'm always waiting for the hatchet to fall on my head. If I'm not, I study, research, really 3 to 4 hours a day. Why do I do that? I know already a lot, but I want to get better and better and better at my game. When I started speaking 15 years ago, I know at least 100% more, maybe 200% more than I do today. So you always got to get better at what you do. Become a better investor. Survival of the fittest, adapt or die. It's not the strongest that survive, nor the most intelligent. It's the one who adjusts, is most adaptable to a change. Adjust, adjust, adjust. I got a big, how many of you guys in here are over 70? I'm the only one. I have such a huge advantage over all you guys. One, because I've had all this experience. And I'm not an idiot. So if you got a brain in your head, you learn from your experiences. You're older than 70. Huh? Come on, man. I know you've been out in the sun a lot in Southern California, and but you develop experience. Some of the people that I've learned the most through in life, do you think it's 35-year-old kids that came out of Harvard? No. It's guys in their 70s, guys in their 80s, some guys in their 90s. And since I wrote my book, I answer my own phone if anybody's ever called me when I'm there, when I'm not at the gym or not at the beach. And I've had some amazing calls. Unbelievable people. And you can learn from older people. My dear old dad, the builder, a building site is a rough and tough guy, that rough and tough place, It's not a place for, it's kind of a man's thing, because you have to be strong. I mean, it's a physical world. But my dear old dad said, never take advice from anybody that is under 50 years old. I said, why, Dad? Because they haven't had their head in the cement mixer enough times. And anybody that has, I kind of draw the line with real estate. The people that I like to talk to that have been in real estate a minimum of 20 years. Minimum. 2 cycles. 2 complete cycles. 1 up, 1 down, 1 up, 1 down. Now you got some, now you're experienced. You've never been through 1 complete cycle? You're a newbie. You're a newbie. And until you've experienced things, until you have your own ass on the line with money, it doesn't make any difference. When your own money's on the line, then everything makes a big difference. Some people paper trade the stock market to see if something works. Worthless. You know why it's worthless? Because your money's not on the line. And when your money's on the line, you know what happens? Fear and greed, right? You're scared when things go down, and when things go up, you start getting greedy. It's a good test. I trade the market every day. I trade it to stay sharp. I'm not a day trader, I'm a position trader. The stock market dropped 375 points yesterday, right? And today it opened up down 70. I bought the market. I bought into fear, because the trend is still up. You buy fear. That's what you do. And that's what I'm going to teach you here tonight. The same principles that apply to the stock market apply to real estate, apply to bonds, apply to baseball cards, apply to anything. Markets are markets. If you write one thing down, important thing, that's a good thing to write down. Markets are markets. Don't everybody scramble to write that down now. By the way, that's what led to this book. I was in Austin, Texas. I spent $5,000 to take a weekend course from one of the best commodity traders in the United States. And he said, markets are markets. And I go, really? I said, would that apply to real estate? Mr. Campbell, markets are markets. And that led to that book. I swear to God, on a stack of Bibles. That's what led to it. So you never know when the breakthrough. Always be curious. Always have an open mind. Always be curious. Then start testing things. If you don't think if you think life is easy, Fortune 500 firms in 1955 versus 2015, only 12 of them are still on that list. What does that tell you? Does that tell you life's tough? Yes? Can you see that? 88% aren't on that list anymore. Now all those 500 that were on that list, those weren't stupid people. Those are Fortune 500 corporations, big successful corporations. Why did they were either went out of business, their growth rate slowed way down, or they were purchased. But nevertheless, they aren't on that list anymore. They became complacent for some reason. So this is the scary part. You can avoid this. You don't have to be a casualty. Where the U.S. housing market is going and why? The trend is still up. CoreLogic. That's a home data provider. Home prices are up 7.1% year over year in March, up from 7 in Feb. This is a momentum chart. I use momentum. Those of you guys that want to track market, that's how I track real estate markets. Momentum. That's what gives me trend signals that trend change. You know that because you read my book, right? And it works great. Interestingly, when I first wrote my book 15 years ago, I tested it on 20 years worth of data, back tested it, and it worked because I knew the cycles. 15 years later, that's the real test. See if the system works. It works even better. Thank God. Thank you, God. Because you never know. You never know. U.S. home prices. Oh, come on, man. Oh, I'm sorry. U.S. home prices sit today 2.8% below the 2006 peak. So this is CoreLogic. So anybody that bought a piece of real estate at or near the peak in 2006, they're still hoping to get to break even. They have no sense of timing whatsoever. They bought when prices are high. And I'm going to show you that's the worst friggin' time to buy. That's not how you get rich, buying when prices are high. And if you don't believe me, read about Warren Buffett. Think that guy buys when prices are high? No. 3K Schiller, these are 3K Schiller cities. Oh, come on, sorry guys. 3K Schiller cities, they're in the bubble zone right now. San Francisco's in a bubble. Two other cities, clear bubble. In fact, that's slowing down. San Francisco, the prices are still going up, but the writing is on the wall. The prices went up 100% in the city in 4 years. Is that normal? Nope. It's going to crash. I mean, it may not crash in the next 3 months, 6 months, but when that correction comes, people are going to get their head handed to them. And I have tons of subscribers in the Bay Area. I speak up there every year at Marin. I got all those guys, the guys that listened out at the peak of the market in 2006, and they've been with me 10 years. So anyway, San Francisco, Denver, Dallas, those guys are really cooking. You know what the supply of homes on the monthly supply of homes available in Denver is right now? 1 month. 1 month. Is that normal? Nope. You think that's a little bit of euphoria? Yep. These Midwest cities, Denver, Dallas, I mean, look what they did, going back to the year 2000. They're kind of flat. That's what they do. Those are cash flow cities. Now all of a sudden, they're big price appreciation. What, did something big change? No, it didn't change. I'll tell you what changed. Yeah, the mood of the market. Those guys got overwhelmed with greed, and now it's pushing prices up. And there's nothing to stop that. Bubbles are great. Don't be afraid of bubbles, because you can make a lot of money on bubbles, on one condition: you know when to get out. You want that. You want this stuff to do this. You want this stuff to go because you're going to ride that trend all the way up there if you're watching the right indicators. So don't be afraid of this stuff. I have people call me all the time, Bob, what should I do? You hold. What do you mean? Prices are high? Of course they're high. What's the trend? The trend's up. Selling too early is not that much difference than selling too late, because you know what the net result is? Lost profits. And my timing system, the model I use in this, is accurate 85 to 90% of the time. That's why I'm so confident. A little kid could do what I do. I mean, assuming he had some brains, just follow the system. And by the way, let me make an important statement. Having goals is fine, but systems are for winners. Who said that? Yes, systems are for winners. You need a consistent way to enter and exit markets based on trends, because if you don't have a system, you're flying by the seat of your pants all the time. I'm obviously older than everybody in this room except even you. You're just an old-looking 55. Here's a real estate investor. I'm just teasing you. On a national basis, let's look at the key indicators I follow. There's 5 key indicators. All you need to do is follow 5 key indicators. 1, existing home sales. 2, new home building permits. 3, notice of defaults. 4, foreclosure sales. 5, interest rates. So let's look at all those key indicators right now and see what they're doing on a national basis. Existing home sales. This is nationally. They're up 4.4% year over year in March. Trends up. That's good. This is if you only follow one indicator, follow this one. I don't advise you do that, but some sense of timing is better than none, I suppose. Supply of homes for sale. This isn't one of my key indicators that I use in my book, but I've learned that's part of what I've learned in the last 15 years. It was 3.8 months in March 2017. Normal is 6. So in other words, right now, and this is it was 3.6 back here, just a couple more, 3.6 months, which was at a 17-year low. Why is it so low? Who knows? What is happening is 10 times more important than why it's happening, because what is happening drives your decision making. We can sit here and debate, all night about why the supply is so low. Does that matter? No, doesn't matter at all. It's a piece of data that you can help to make a better investment decision. There were 1.8 million homes in March 2017, down 6.6 from a year ago. Everything I do is year over year, ladies and gentlemen. Nothing monthly. Monthly data is noise. And you know who uses monthly data? It's newspapers, magazines. You know why? Because they make a big deal out of it. Oh, new home building permits dropped 6.7% last month. Oh my God, everything's coming apart. Oh, but it's up 5.4% year over year. They do that to get you excited that, gee, maybe, to sell their newspapers or their periodicals. Don't fall for it. Home buyers there's bidding wars in the United States, obviously. Bidding wars. Vital sign indicator number 2, new home building permits. They were up 4.6% year over year in February. This is nationally. Trend is up. Indicators number 3 and 4. This is mortgage defaults, that's foreclosure. U.S. foreclosure starts fell 23% year over year. Foreclosures are down 22%. That's good. When foreclosures are going down, that means people aren't in trouble. If you can't make your mortgage payment, and you quit paying the friggin' mortgage, you can't afford it, you lost your job, whatever happened, all you got to do is put that house on the market. In 60 days, it will be sold fast. It probably go into a bidding war on the courthouse steps. I think that's a good way, in fact, to avoid using a 6% real estate agent. Let it go into foreclosure. Those idiots on the steps will bid it up over fair market value. At this point in the cycle, you know what I'm saying? Is that going to happen at the bottom? No. Lastly, what about falling housing affordability? Housing affordability is falling, right? Is that a bad thing? No, it's a good thing. Let's look at the trends. And this is very counterintuitive. This is U.S. home affordability index from RealityTrack. And the trend, in other words, housing was getting more and more affordable from 2005. The trend was falling from 2005 to 2006. And what were housing prices doing during that time? Falling. No, they were rising. All of a sudden, then the affordability started getting better and better. What were housing prices doing? They were falling. Now all of a sudden, look at this. Peak right at the bottom of the market. Housing affordability, this is from RealityTrack, hit an index value of 149, and now it started falling again. Housing is getting less and less and less affordable year after year after year. What are prices doing? So it's exactly the opposite as you would think. You have to know these things if you're going to be a superior investor. I don't have time for questions afterwards. You have to know these things. You got to be so good at your game. Real estate timing's easy. You want to get challenged, try the stock market. And I'm pretty good at that, too. Yeah, it's taken me 30, 40 years to figure it out. Believe me, I've made every friggin' mistake in the world. California housing market. California housing market. Welcome to the most dramatic boom and bust cycles in the country. This California is the best place to be a market timer in the world. The very best. Has big booms, sell, big busts, buy. Market timing isn't nearly as profitable in Oklahoma City or Kansas or Memphis. Not saying you can't use it, but what you want, if you're a timer, if you're good at calling trends, you want big swings in the market, right? It scares a lot of people. That's because they don't know how to use the cycles to their own advantage. Look at this. Okay, here we are. This is from FHFA, Federal Housing Finance Authority Association. This here's U.S. housing, going back to 1975. We've got 40 years here. This is U.S. housing cycles, the housing prices. Here's California. Way more volatile. Way more volatile. So use it to your advantage. It's a gift. Okay, now I'm going to look at the 5 key indicators for California, show you why the trend is still up. Existing home sales, California. Down. They're down 1.7% year over year in April. Is that good or bad? It's bad. They're down. In other words, existing home sales is a pure measure of demand. You want more and more people coming in the market. Because when they roll over at the top, sales go down. Year over year. That's what this stands for here, right? Year over year. They're down a little bit. So why is California prices still cooking? SoCal prices, where we are. Home sales fell sharply in April. They're down 6.6% year over year. That's troubling. But all of a sudden, these are little warning signs that are coming up, folks, that I'm looking at. I monitor them watch them very, very closely. Anybody here a pilot? I was in Air Force training till I washed out for a physical problem that I still have. I wanted to be a pilot. But if you're not like super stud, you can't be a pilot. So, the future, nobody knows what the future holds. Nobody. Not you, not me, and not anybody else. You can kid yourself. What do you think is going to happen, Bob? I don't know. I'm going to have to let the market tell me. Oh, come on. I don't know. Do people like that answer? Everybody's starved for certainty. We don't live in a certainty world, ladies and gentlemen. Nobody, other than being able to figure out the weather 3 days in advance with a barometer, everything else is like you better use some other indicators. But so we're down 6.6%. That's not a good sign, but that's only one indicator. Never base your investment decisions on one indicator, your real estate decisions. So home sales are falling, but the supply of homes is also falling. So home sales are, this was for December. Let me see, did I get a better chart than that? Oops, no, I forgot to update that chart. Oh, I'm sorry. So this was through April. So what's happening here is that the supply of homes is down, for San Francisco, 5%, and the supply of, demand's down 5%, but supply is down more than that, 15%. And it's the same all the way through. Southern California, same thing. That sales are falling, but so is the supply. So there's still, you see how the supply and demand's working? There's still more demand relative to supply. That's what's supporting prices. And the same thing in the Central Valley. Vital sign indicator number 2, California. New home building permits in California. They're up 5.2% in March. That's a good sign. That's a good sign. By the way, the trend for Southern California or California real estate prices is still up. Let me, you don't have to look at these, the net effect is still up. The only negative indicator we have now is falling home sales. California home prices up 5.4% year over year in April. This again, this is CAR. CAR, Ministry of Truth. And by the way, guess how many speeches I will go to listen to Leslie Applegate tell me about California real estate? Guess how many of those speeches I've listened to in the last 15 years? Take a wild guess. Zero. Because all she cares about is her inside. Have you ever heard NAR or CAR tell you to sell at the peak? Did they ever say that? They even come close to that? No. Anybody that didn't figure out that, they kind of lost my respect. California Vital Sign Indicator number 3, notice of defaults. Notice the defaults, ladies and gentlemen. This is a trend here. We're down 24% year over year in March. This is for the entire state of California. Very good. This is what's supporting prices. So there is no indication right now of a trend change on the radar anywhere between, I would say, at least 3 to 6 months. And it may be a year, because I can't see past that. My indicators are leading indicators. They can see down the road, but they can't see around the corner. I live that for the fortune tellers. And trust me, there's tons of those. Oh yeah, here's what's going to happen. Really? See, what they don't, you can fool the audience, but you can't fool the players. I've been doing this for 50 years. Somebody afterwards was asking me about Peter Schiff. They go, what do you think of Peter Schiff? I said, he's horrible. I said, he's been wrong for 6 straight years. A good friend of mine keeps wanting to take me on that cruise ship he goes on to tell you what's going to happen in the future. And I go, no thank you. Peter Schiff, he called the bubble correctly, right? You know what that makes me, after he did that correctly, he's been wrong for 6 straight years. You know what that makes me think? He was lucky. You can get lucky. In fact, even Peter Bernstein, who wrote something like that, wrote a great book about risk, something, Revenge of the Gods or something like that, during any 3-year period, whether it's stock market, real estate, gold, baseball cards, you name it. The people that are most successful in the market, you know what it's attributable to? Pure luck. Because there's enough players out there, and that's when CNBC trots them out there and goes, hey, this guy the last 2 years, the market's only up 15%, this guy's up 70%. He was lucky. He was lucky. He went all in on this thing. He could have been, but he's the guy, he's the guru to follow, so everybody jumps in and follows that guy, and guess what happens? His luck runs out. And I'm telling you guys want to read a great, great book? Anybody ever heard the guy, Talib Nassim? No, huh? Fooled by Randomness. Buy that book. That's the real world, dude. It's a scary place out there. Anybody think, oh, this is easy. No, it's not easy. Nothing's easy. Everybody wants you to make it believe it's easy. I mean, it's easy if you're really smart. There's some guys that's easy to. Guys that have made, some of the guys, and those are the real pros. Guys like Stanley Druckenmiller, John Tudor Jones. Smart guys. You may have heard Stanley Druckenmiller. He's so good. You guys never heard Stanley Druckenmiller? He ran a hedge fund for 25 years. Made an average rate of return over those 25 years, 30% without a down year. Think he's smart? Was any of that, is that luck? No. That's why, those are the guys I follow. I follow those guys, because I know they're smart. Vital sign indicator number 3, 5, interest rates. Mortgage rates were 4.2% in early May 2017, up 11.4% from May 2016 when they were this. Every percentage point that interest rates drop, a buyer's purchasing power falls by 11.75%. So in other words, right now, anybody buying a home right now with the same income as a year ago, they can buy something like 5.4% less home than they could a year ago. Right? Interest rates is my least, is the least reliable leading indicator I use, but still it's important. I explain that in my book. Oops. California housing, I don't want to do that. State of the U.S. economy. If you invest in real estate, you have to understand the economy. You have to. You have to have the big picture out there, guys. You just can't say that, oh, everything's going great, blah, blah, blah. Well, what about the big economy? Because it is something to know about. I have a lot of people right now that are calling me that are afraid. And they're not afraid of real estate crashing. You know what they're afraid of? The economy. Afraid of the economy. And they should be afraid of the economy. And they know they should be afraid of the economy. For a lot of reasons. I only have an hour here. So I gotta rush through this stuff, guys. Economic growth. We've had the slowest economic growth the last 10 years since the Great Depression. That speaks for itself. Why? Speaks for itself. Slowing GDP growth. Look at this. This goes back to 1965. This is year-over-year growth. Boom, it's down here. Is that a problem? It's a huge problem. Huge. One, we could be getting closer to a recession. Is a recession going to be good for us? Nope. I don't see one on the horizon yet. But we're going to have a recession. It's coming, folks. Why is that? So why is things growing? Why is economic growth so low? It's the debt, stupid. Pure and simple. It's the debt. Why? Do I just say that because it's a clever thing to say? Federal debt is rising by $1 trillion a year, and with what's going on in the economy right now, it's going to keep rising. It's not going to. Trump says he's going to pay off the national debt in 8 years. Total BS. Being deeply in debt is like a mouse on an exercise wheel. Whether it's human beings or collectively the economy as a whole, you're going to run your ass off and you're not going to get anywhere. And that's the situation we're in, ladies and gentlemen. It has a depressing effect on economic growth. The only way to get out of the debt problem, and despite Trump's best efforts in positive business policies, and hey, look, I am totally apolitical. I hate the Republicans, I hate the Democrats. But I have to tell you, I made 5 bets during the election because I know how to calculate odds. I made 5 bets with 5 of my friends in the gym. They gave me 5-to-1 odds that Hillary Clinton would win. And I go, I'll take it. And 2 of those idiots doubled down. Yeah. I go, you want to double down? Sure. It's amazing because I just know how to figure odds. I knew he was going to win. It was worth a bet. If you got a special coin that comes up heads 80% of the time, and obviously there's a coin flip, what are you going to bet? Heads. Well, there's no other bet. So if you think this big economic growth is the only thing I have to say is this: ain't gonna happen. U.S. government debt, and let me show you why. U.S. government debt to GDP is 104% in 2016. The ratio, being historically informed is a big part of being a successful investor. Historically informed investors are 5 times more successful than those that don't have a clue. Does that take effort? Yeah. It just depends how important investing is to you. To me, it's a huge challenge. I love it. I like being good at what I do. Last year I played in the stock market, trading the stock market. I beat the stock market averages. Is that easy or hard to do? I did it. Yeah, I know, I'm happy about that. See, most of you guys don't even have don't know what standards to gauge. You have to be able to gauge what standards. How do people do in the long run? Do you know how the average investor does in the long run? Poorly. Do you think he does well or poorly? Poorly. But that's the challenge, you guys. That's the challenge. You don't have to do poorly. Systems are for winners. The hard truth. So we're up 106%. This is reality, 106% GDP. The hard truth, there's only one way to get out of big debt, and that's big growth. But the idea of growing our way out of this is a total fantasy. Why? Because the more you get into debt, the lower the GDP. This is a scatter diagram, scatter chart, with a regression line going through it. And if that doesn't mean anything to you, how about this? This was done by, everybody read the book This Time It's Different? Rogoff and Reinhardt. Great book. They studied economic history back 200 years. Most people can't remember what happened 5 years. Most people's memory is in the market 5 years. I want you to give me a 15-minute heads up, okay? I'll know how fast to speed up. So anyway, so let's look at this. We know how deeply we're in debt. We're at 104%. We're at 104%. What?
I said we're going to 9:15, so I'll let you know when it's 9 o'clock.
Okay, we have right here, so when public debt gets at 120% of GDP, here's the growth, 1.2%. Is that good? You know what our average growth has been in the United States, for the last 50 years? About 3.7%. That's been average. Now we're at, too optimistically. Is it getting better or getting worse? I showed you the graph, it's getting worse. Okay, we get at 90% of GDP, public debt, here's the growth. So we're at 104. And with no public debt, here's what you get. It's just imagine yourself, the average American has no debt and makes $50,000 a year. Does that person have a lot of purchasing power still? Maybe to buy a car, to buy a house? All of a sudden that person has $100,000 credit card debt. Does that person have any purchasing power at all? No. These principles are so easy, so easy, so easy to see. So this massive buildup of debt, why hasn't the U.S. economy crashed and burned? Simple. Back in 1980, interest rates, 10-year Treasury was over 15%. Today it's at 2.4%. What this means is this. The U.S. government, if they borrowed $1 million at 15%, their debt service was $150,000 a year. Interest rates fall. They keep falling. Of course, does public debt ever get paid off? Never. Only thing it either gets inflated away or defaulted on. And the U.S. is going to inflate it away. That's what's going to happen. So all of a sudden, now they went from 15 to let's say 2. So what that means, that $1 million, now you can borrow $10 million, and what's the debt service? $150,000 a year. You understand? That allowed them to crank up the debt like that. Because without lower interest rates, and this went from up here $1 million to 10 million, the debt servicing would have been 1.5 million, would have been more than the debt they borrowed. That's what's allowed us to do this. So why did this happen? Lucky. And you can't rein in spending. They won't rein in spending. Because what politicians do, this is how they get elected. They keep putting on more debt, giving away stuff. Everybody's this big spender, right? Nobody has to sacrifice, and this is how they get elected. And I tell you, I hate politics. I don't trust either side. But I'll take a good bet. I'll bet on anything. My neighbor was selling her car. She takes care of her car. She washes and waxes it every week. So she was going to sell it. I said, it was a nice little sports car. I wanted the kind of sports car. I had the urge for it. I said, what do you want for your car? She said, I'm selling it. She's buying a new Porsche. $5,000. I'll give you $5,000. I never rode in it, never sat in it. I knew how she took care of that car. I drove it for a year, sold it for $1,500 more than I paid for it. She's still pissed at me. It was her price. And my neighbor goes, I didn't ask her. I didn't negotiate with her. You got to know value. You got to know value. I know value. Okay, so this is what happened in the United States. This is what I showed you before, right? 1980, interest rates were here. Here was the public debt. Interest rates come screaming down. Public debt keeps going, raising right and right and right. Because the debt servicing cost doesn't change. And what about the U.S. job market? During the current economic recovery, the percent of people with a job has regressed all the way it was 40 years ago. True or false? The government tells us that the low rate of labor participation is because people like myself, the baby boomers, are all retiring, and that's what's contributing to producing this number. True or false?
They're telling you that.
False. Since the start of the economic downturn in 2007, workers age 55 to 69, the boomers, has risen by 5.4 million, while the rest of them are down by 3.5 million. Boomers have to work. They have to. Everybody thinks we have this affluent society. It's not that affluent when you dig into the numbers. There was a book written in at the Atlantic. Guy wrote a report. The struggling middle class. And what he claimed, he was a guy making $100,000 a year with 2 kids, and he said, I'm barely getting by. And you know what's killing us? Healthcare costs. That's going to be the straw. I talking about this 4 years ago. That's the straw that's going to break the camel's back. It's rising. For the last 20 years, it's been, or 10 years, I should say, it's risen by an average of 9.3%. Compound something 9.3% for 9 years. Do that on your calculator and see what you come up with. You know what you come up with? A disaster. And it's still going up. That's because of the criminal medical cartel. Because that's the biggest lobbies by far, and trust me, you know who pays into the pockets of the politicians the most? Medical industry. They protect them. It's a protection racket. No different than the Corleones. My girlfriend's Sicilian, 100% Sicilian. Boy, have I. Who else is? Anybody else Sicilian? Are you? Oh boy, I'll tell you. We get along like peanut butter and jelly. But I'll tell you, she goes, that person does me, I'll stick a stiletto in their eye and see how they like that. I mean, she's from Chicago. And her parents grew up in the Al Capone days. That's Chicago. She had an uncle that was killed, hit. So with a smaller percentage of Americans working, how can the unemployment rate be 4.4%? They stop counting you. After 2 years, if you quit looking for a job or you're so friggin' depressed that you know that you stop, they don't count you. So theoretically, the unemployment rate could go to 0 and nobody would have a job. This is the way the government does statistics for you. Crappy low-paying jobs per year are increasing. Here's the crappy low-paying jobs. You know, bartenders, valet parkers, people that walk dogs, breadwinner jobs, manufacturing, they're down. This is all starting in 2007. And the millennials, these guys coming out of college, these college kids, 50% of them with a college degree are still living at home at age 25. And now they're talking about, by the way, now they're talking about the millennials. They're emerging from their parents' basements. They're walking through the front door, and they're going to buy homes. This is the projection. This is what the housing industry is telling us to keep everybody jacked up. Is that true? I have no idea. But I'll tell you, if that's true, if that is happening, I don't need to know whether it's true or not, because I only have to follow one indicator to know it is true. And then you know what that indicator is? Existing home sales. If the demand is increasing, it's going to be reflected, right? I don't sit here and have to debate what's going to go on. Data. Data will always make you a better investor, or whatever you do in life. Doctors that use data the most are far more successful in diagnosing illnesses and coming out with the proper cure than those that don't. Oh, I'm a cardiologist, and I've been in this business 30 years. I know what the problem is. Versus the young stud that just got out of medical school, he goes, I'm going to run all this test. Maybe the old guy missed something, right? But the guy that uses data only will most likely have a higher success rate than the guy that doesn't use data. And there's books confirming that. If you believe the inflation numbers, okay, now we don't believe the unemployment numbers, right? I mean, you know what they're telling us. How about the inflation numbers? Soaring costs of license, they say inflation's 2%. It's not. It's more. Because look at this. Here's medical care. I mean, since 1980, medical care is up 650%. New home prices are up 450%, and CPI all items is up 268. The things you need in life are going up. Housing, medical care, food. But they throw everything in there like computer monitors, flat screen TVs. Who gives a friggin' about those things? How many times do you buy those? But so you get down to this. The only way, so we look at food, energy, and medical and housing. Inflation has been running at 3.1% per year since 2000. If we overweight it, and that's fairly consistent. I'm not going to come up with some number 10%. There's a lot of people who will tell you that we're in the 5 to 10% range. Anybody aware of that? Chapwood Index. John Williams. I'm not going to go that far. I'm just going to show you here. So inflation's been around 3.1% instead of the 1.7. Here's what the government tells us. Here's what really is happening. So what does that mean? That means Americans are losing ground. People are not. There's three things to be successful in life you have to do. Three. One, you have to adjust to markets. You can't let them clobber you. Two, you have to take into account taxation. You make money, you're going to get taxed. And three, you got to take inflation into account. This is a formidable challenge, ladies and gentlemen. Big challenge. I like challenges. It's a competition. It's a competition. I don't care whether you're playing volleyball or trying to stay ahead of the markets. You want to beat your opponent, and it's tough. 100 people are born this year. By the time they get to the age 65, guess how many out of that 100 are going to be comfortable financially? 4. Now, does everybody wake up and go, I want to be poor when I'm 65, living on Social Security? Do most people try? They try and they fail because they're bad at what they do. They don't try hard enough. So in other words, using inflation at 3.1% since 2000, that what you could buy in 2000 for $1,000 only buys $600 today. That's why Trump was elected president. That's why I bet on Trump. Now look. So if we see incomes, if we adjust incomes for 3.1% inflation instead of 1.7 like the government tells us, since 2000, the average income adjusted for inflation has gone down from 68,000 to 54. That's why Trump got elected. We're not keeping up with inflation. And we're slowly, this isn't something that's going to be a collapse like the next real estate downturn could be, but it's slowly sinking. 15? Thanks. Good. That's why he got elected president. That's why he got elected president. Americans are having a harder and harder time getting by. I can go in the gym. I ask all my buddies that aren't retired, I say, how you doing? Oh, everything's good. Everything's good. Let me tell you, the average American is having a harder time paying his bills and taking care of his family than he ever has before in history. The average male is much more likely to admit that he uses Viagra to have better sex than he is that he's struggling financially. It's a man thing. Way more. And by the way, did anybody happen to notice that the longevity of men in the United States went down last year? Anybody notice that? With technology, it keeps getting better every year. This is really interesting. Why? Why did it go? It almost fell a year. That's because men between the ages of 45 and 55 are dying from drug overdoses, alcoholism, and suicide. 45 to 55. And that's the prime working age, right? Like they never have before in history. The suicide rate in Greece for kids that are 30 years old that have a family, it's gone up 1,000 times since Greece got into trouble. It's depressing. You can't take care of your family. And people are going to alcohol, to drugs, and killing themselves. That's amazing. This has never happened before in history. Why are these guys doing this? It's my view, it's the economy. I know they're having trouble keeping up. I know it. The statistics show it. New business startups. Look at this. This is net. Net annual change in the number of firms that come into business versus leave the business. 1990, it's all above 100,000. All of a sudden, now we're down in this decade. Look at this. And 90% of economic growth comes from small business creation. 90%, no, 70%. Take that back, 70. It's hard to make it in small business now. You got to be on your game. You got to be better than ever, you guys. And I encourage you to do that. That's the motivation pitch. You got to be good at what you do, especially us guys. My ex-wife's father just left both of my kids. She's the only kid. He started building big apartments in San Diego County after World War II and has 2,000 units in San Diego County free and clear. Free and clear. He's like 80 years old and really had 2 heart attacks. So finally his accountants told him, he said, look, get rid of the money. Give a third to your wife, give a third to your daughter, and a third to each kid. For tax reasons, decided to do it. He did that over a long course of time. You couldn't do that today. The opportunity was great. You know, when I graduated from UCLA in 1969, I'll tell you, we had a higher standard of living then by far than we do today. I could buy a house for $70,000. Could I get a job if I wanted to right out of school, a decent job? Absolutely. I used to get, a good used car, hot rod, that was the muscle years, every year. I'd get a big Mustang with a 427 in it, trade it in the next year for a Camaro with a 396 in it. Those cars move, baby. And it wasn't a big deal. I could do it. I'd trade in one, I'd buy it for $5,000, next year I'd trade it in, and I'd get like $5,000 for it and buy another car. College, talk about college. I forget what it was. I think I spent $250 a quarter for tuition. Do you know what one economic book costs right now at UCLA? $250. I could live in a fraternity, room and board, $500 a month. Did anybody get student loans back then? No. So anybody says, oh yeah, you got a much better day. We got computers and stuff. Screw that. I could live without a computer if I had to. It's better than what we're going through now, where everybody's struggling to get by. And it's all because of the debt. Everybody's gone into debt to maintain their standard of living because the good jobs have been outsourced, right? So you got to keep up with the Joneses. Got to keep up. That Mercedes is getting a little old. Need a new one. Question, if the U.S. economy and the U.S. job market so weak, why is the housing market so strong? Same reason. Interest rates have gone down. There were 2,000 here. In 2008, 8.3. Today, they're 4.2. Every point of interest rates drops down, that means a borrower can buy, almost 11% more house. So to a large degree, 50% or more of this rise in interest rates is directly attributable to lower interest rates. You go back through here, through this period of time, boom, boom, housing prices were very closely correlated with incomes. Very close. Not anymore. Incomes go down, housing prices go up. Why? Because the cost to carry. The cost to carry isn't, just like the government. Falling interest. This here is Larry Summers. Anybody know who Larry Summers is? Wow. Okay. Falling interest rates for 35 years as a result in a debt-fueled, wealth-creating disease that has artificially inflated asset values. I'm going to show you. We're not talking just real estate. We're talking stocks. We're talking baseball cards. We're talking cars. If I could have one car, I almost went out and bought it's either 68, 67 or 68 fastback Mustang that, like they had in Bullitt. I like that car. And so one of my subscribers sells cars, and I go, I'm willing to pay $35,000. And he goes, Campbell, they're double that. And I go, screw it, I'm not going to pay it. I'll buy that car. I'm going to buy that car in the next 5 or 10 years. And am I going to pay $70,000? No. I'm going to have cash, and everybody else isn't. But here's what Summer says. It's only rational to recognize that low interest rates raise asset values and drive investors to take greater risks, making bubbles more likely. Amen, brother. Amen. So you got to know what's happening out there. We all think we're investment geniuses. Oh, gee, I'm so rich. I'm really. Of course, everybody's a genius in a bull market, right? Anybody heard that expression? We're all super smart. Wait till the downturn comes. What does it mean? I'll tell you exactly what it means. It means rising asset prices are like a circus mirror. It creates the illusion of prosperity that deludes us into believing that because of the Fed's monetary manipulations, we are wealthier than we really are. Don't let it go to your head, folks. Don't get complacent. Oh, I got it made. That's why I tell my wealthy clients, some of these guys, have lots of dough. I go, you're already rich, and you're 90% of your assets in real estate. Stupid. That's stupid. You could lose it. You could lose half your money. How are you going to feel losing half your money? It's not how much money you have, it's the direction you're going. If you have 10 grand and turn it into 20 grand the next year, how do you feel? Terrific. If you have 10 million and next year you're worth 5 million, how do you feel? You feel like putting the Glock in your mouth. It's true. I'm not saying that just to be funny. That's the way people are. People don't like to lose. Here's my outlook for housing prices. I use data to anticipate coming events. Why? Because data speaks 10 times more loudly than opinions. March, here's my timing model that I show you how to do in the book. Same model exactly. This is for March 31st. This is that I just published the May letter, and the most current data that goes through March 2017. Crash index for Southern California. Plus 15, it's above the zero line. This is another momentum indicator. Above the zero line, that means housing prices are still likely to increase in the future. And by the way, you look at this right here and say, okay, how's it done in the past? We had a sell signal in August 2005. Was that good? That pretty well nail it? Yeah, it nailed it. Do you guys know about the housing cycles? Do you know that that the market can take it away from you as fast as it can give it to you? That's life, guys. You really have to get attuned to these cycles. And I don't care if you're in the stock market or the real estate market. Cycles can make you rich. They can also make you poor. And until you get on top of that, you're never going to be successfully long term. You're just going to be, if you're successful, it could be luck. 30 years, okay, let's look at Los Angeles. Let's look at 30 years, this is the model I use, 30 years of timing cycles for the Los Angeles market. And this is from FHFA, the price index for Los Angeles. My index gave a sell signal March 1991, a buy signal February 1997, a sell signal February 2007, and a buy signal 2010. This is the worst signal at all. It gave a signal to buy right here. Housing prices fell 6% before they hit bottom and started rising. So don't think it's perfect. I'm only 80 to 90% perfect. I like to be modest. But this is what gives me confidence to talk to you guys like I talk right now. Because I got the data. You can do this. Any of you can do this. Does it take effort? Yes. But you got to be saying, look, I want to be more successful than I am right now. I don't want this to be a big guessing game, when to buy, when to sell. Because the California real estate market has few price fluctuations, you should take advantage of the swings. This is the place to do it, folks. Buy and holding ain't what it used to be. How many guys here are buy and hold investors? How many guys play the real estate game for price appreciation? You can do both. Well, let me take you back to here. Okay, look at this. Okay, that's fine. I'm down with both of those strategies. If you're a buy and hold investor, I'll tell you. Do you want to be buying here? Okay, but you're long-term oriented. You're long-term. Oh, in the long run, they go up. Yeah, 10 years to break even. You're not a successful investor. You're an idiot. Or here's where you want to be buying. If you're long-term, you want to be buying here, and if you want to hold through this, that's fine. And so, but whenever you do, if you're a cash flow investor, where's cash flow greatest? Is cash flow greatest here or here? Right here. You could probably get, 5-6%, on your money in LA cash flow. Are you going to get that kind of cash flow up here? No. So you're going to get big cash flow, big appreciation. And if you want to just hold for 20 years, whatever you do, get out at the peak. So, you bought here, you wrote it down, you still got a margin, because you were so smart to buy here, and it's going up. Now, for you guys that are playing price appreciation, the buy low, sell high game, you know, buy here, sell here, buy here, sell here. Or do both with part of your property. Do both. But incorporate, I urge you, incorporate timing into your thinking. You'll be infinitely more successful in the markets. Infinitely. My, you know, cash flow investors, they said location, location, timing. Buy when it's low. And you know what that takes? That takes patience and that takes discipline. Are those rare human qualities? You're damn right they are. This isn't easy. Takes a lot of fortitude. But it's worth it. Okay, look at this. Buying and holding ain't what it used to be. Okay, this here, what this chart here is showing, household financial assets relative to disposable income. Okay, if you were a buy and hold guy here, you know, okay, here's what happened. That assets went up, assets crashed. Assets went up, assets crashed. Here we are today. I'm not saying it's time to buy, to sell out yet. But it's coming, folks. It's coming. And anybody that thinks that this is like, gee, if I'm cash flowing, I'm long term, this is a good time to enter the market. No, it's not. I mean, it may go up into the 5 years, another 10 years, who knows? But if it starts rolling over, you got to get out. You got to get out. You were wrong. I'm wrong in the markets all the time. My trades I'm only successful 56% of the time in the market. 44% I'm wrong, and I still beat the market. Oh, I can't lose. BS. But so look, here's where we are today, folks. That's how elevated we are. Asset values are the stocks, real estate, and bonds at extreme levels. Are the housing markets irrationally exuberant today? Look at this. Gallup does a poll. Gallup does a poll every year, once a year. They say, what percent of all people expect housing prices, you know, adults, American adults, in different areas. How many of you expect housing prices to increase in your area the coming year? Okay, let's go back to the bubble. 2005, 2006. It was 70% of all people said housing prices will rise, and only 5% said they will fall. At the peak of the market. How much? That's it? Hold on. Can't let you get. Okay. Here you go. What time is it?
9:15.
I can't. I'm at 5 more minutes.
5 more minutes. 5 more minutes. Let's hear it.
You guys missed out. You guys missed. How many of you guys want to leave? Good. I told you. Okay, look. This is history of pricing. You know, this last decrease was 6.3%. This is going back 40 years. This was the fall. It fell 6.3 in real terms. 12.3 in real terms back in the 1970s. 13.5 in the 1980s. The last fall was 35.4. You notice a pattern there? Every market cycle, housing prices are doing what? Falling more or less? More! You got to pay attention to this stuff. That's why I say this next downturn, it could surprise a lot of people. Am I saying that's going to happen? No, but look at that and say, no, it's not. That's like standing in front of a freight train. It can't hurt me. Let's look at the big picture. I can't do the big picture for you. I don't have time for that. I know that. Here's why socialism doesn't work, by the way. By the way, what we're witnessing right now is the collapse of socialism. If you haven't figured that out yet. Collapse of socialism. That's why everybody's so upset that Hillary didn't get elected. Because that's the old status quo. Keep doling out the money. But that's what we're feeling right now. I'm doing seminars, 2 seminars a year. I'm doing one in October. How to protect yourself. This is the big picture stuff, guys. Big picture. Final words. As investors know this, Fed manipulation to lower interest rates and boost housing prices isn't magic. It's a trick. It's a trick. My prediction, I don't make predictions. I mean, I can see what's coming. I can see the event, like the big picture. I can see it coming. I can't tell you exactly when. I need indicators. But if I know it's coming, I'm going to get out of the way. I'm not going to stand right there and let it slam into me. My prediction for 2017, we're going to see who's prepared for big economic changes and who isn't. And here's our old pal Warren Buffett. When the tide goes out, Only then do you see who's swimming naked. So, my friends, what should we do with our money? Here, you got two options. You can try to guess on your own what's going to happen in the future, or you can listen to these real smart guys that have real good stories, and they'll tell you very convincing stories. These guys aren't idiots, by the way. They're smart. And you get sold on the story. Or, I think there's a better option. I know there's a better option. You can follow trends and be self-reliant. This is how you this is the system. Systems are for winners. That's me. All of a sudden, see, the trend goes up like this, and all of a sudden it breaks through line and starts going down. You know when to get out. You know when to get out. In other words, don't worry about things that are out of your control. Don't worry about them. I'm worried about this. I'm worried. What? You can't control that. Instead worry about things that are in control. You can follow trends, and you can get into the market at the right times and out of the market. That you can control. Nothing else you can control. Wealth has wings. I told you that at the start about the Fortune 500 crowd. Look at this. 70% of all wealthy families lose their wealth by the second generation, and a stunning 90% by the third generation. Each of my kids was given 15 million bucks, maybe 20. They won't tell me because I'm not on good terms with my father-in-law. They're making $1 million a year in income. But that doesn't mean he has to, my son, I can't let him not work. He's a real successful real estate agent. Because you know what's successful to a man? Does a man have to prove himself in this world? You know what happens to trust fund babies? They go to drugs, they go to alcohol, they go to hell. And so I've instilled that in my kids. They got to do that. And so he's doing really, really well. But a man has to do something that other people are proud of him. His wife, his kids. Do something good. And I'll leave you with this. Life is 10% what happens to you and 90% how you respond to it.
Yes.
That's what it's about.